So after a euphoric finish to the markets in 2017, the first quarter of 2018 was the worst quarter in 8 years for the South African equity markets. The biggest contributors to the 6% fall were the likes of Naspers, some of the other rand hedges like British American Tobacco and Renette, and then of course we also had the fallout in the property sector, as well as some pressure on the platinum sector and the gold sector from both a strong rand and a fall in some of the precious metal prices. On the positive side, we did continue to see strong performance from SA Inc., in particular the likes of the general retailers, the auto sector, the construction sector and the banks, and that helped offset some of the negative impact from the big rand hedge stocks. Our funds had a particularly good quarter, materially outperforming their benchmarks, helped by our big position in domestic cyclicals as well as small cap stocks. Stocks that contributed nicely to the performance included our investments in Udeco and Altron, and those that detracted somewhat from performance were our investments in Northam and Renette, which were impacted by the strong currency and the weaker precious metal prices. So there certainly are a number of reasons to be more optimistic about South African equities. In particular, if you have a look at the last quarter, Moody's have sustained their credit rating for South Africa. We saw a cut in interest rates, but we certainly shouldn't be naive to the challenges that we face both on the political front and to kickstart economic growth. Having said that though, we remain extremely bullish on the prospects for value in particular. In fact, we think that value is probably the best contrarian trade in the market at the moment for two reasons. Firstly, the relative valuations of some of the SA Inc. stocks, which we see as being hugely attractive. And secondly as well, value tends to do quite well in an environment where growth is becoming more broader and proliferative across the economy. From that perspective, our funds are extremely well positioned with a big overweight position in domestic cyclical stocks, as well as a large position in smaller cap companies.